Almost. Somebody going in and out the door.
What's up, world? What's up, world? What's up, world? Do y'all see my excitement? Because she definitely don't. It's Monday, and it is what's the triple M? Mortgage Minded Mondays, right? Mortgage Minded Mondays. I got it. Almost didn't, but I got it. I'm Tavares Jones, licensed mortgage broker, licensed stockbroker, licensed life insurance and annuity broker as well. And we got we
I can feel you wanting to say something. Go ahead, let it
we
out.
got we got we got a leopard in the house, y'all.
Lioness.
A lioness,
Leopard. I guess the pattern is maybe leopard. Leopard, cheetah.
cheetah, leopard. It's all the same. It's all the same.
Thank you for that splendid introduction, Tavares. It's so kind of you to introduce me in the show today. Good morning, good morning, good morning. That's how I do it, the car line. Good morning, good morning, good morning, everybody. Magnificent Monday. It's afternoon. Welcome to Mortgage Minded Mondays. I am Hyacinth Henderson, co-CEO of the Henderson Financial Group. We are a full-service financial planning and investment advisory firm based in sunny South Florida. Tavares and I represent the Henderson Financial Group on Mondays. When we do Mortgage Minded Mondays, I have a mint in my mouth because I've been coughing and I'm trying not to cough. But now I'm trying to talk with the mint. It's something going on.
You feel like you're in church?
I don't know.
That's
Thank
what
you, Miss
people do.
Redhead, beautiful cheetah. Thank you. Thank you. I'm feeling spicy today. Yes, I am a licensed mortgage loan originator, a licensed stockbroker, registered representative, and an annuity and insurance broker, and an investment advisor representative as well. Today, we have a great show lined up for you all. It is titled The Why Behind the What. As Tavares and I were preparing for this, we were thinking about what we could give the people. I need a drink because I'm about to be coughing again. This is crazy. Take over.
So, yes, last week we spoke about the DSCR loan, right? So if you're a true fan, drop what DSCR stands for in the comments, right? So the DSCR loan is a non-QM loan, right? So that's going to be less documentation required to the left has left the video. so the DSCR loan is a non-QM loan, and on those loan types, we can get you qualified using less documentation. So that particular loan, you wouldn't have to use your income or your employment or your debt to income ratio. Instead, we'll use the income that property is going to be producing to service that loan. DSCR loan. If you guys can put that in the chat, what DSCR means. So today we're going to do the opposite of that. Why? Because not everybody is going to be a good fit for the DSCR loan. Most loans aren't going to be, or most people won't qualify for a DSCR. So you'll have some people out there that do traditional mortgages and traditional purchases and things of that nature. So today, this one's for you. This one's for you guys. And that's what we're going to focus on. We want to focus on documentations, a clean file, the importance of a clean file. And when I say clean file is, since this loan type requires so much documentation, we want those documents to be as clean and as readable as possible. Because keep in mind, once you guys submit those, there's going to be an underwriter that doesn't know you from a can of paint that's going to make a decision on your purchase, right? Based on your life. So you want that picture to be as clean and as visible and as legible as possible. Because like I said, they don't know you. They won't be able to have a conversation with you. They won't be able to shake your hand. They're just going to judge you off of the information on the documentation that you submit. So we want to prep you guys and get you guys prepared for that.
Ooh, I'm back.
You all right?
I'm all right. Oh my goodness, what's going on? Okay, I'm back. So yes, last week we talked about the DSCR. Thank you for bringing that back to today's show. No one has dropped it in the comments yet. Hopefully, when I come back and check the comments in an hour or two on Facebook, someone will remember what the DSCR loan is. All my investors, all my people who want to buy additional properties, who want to get into real estate investing, you should know what that acronym stands for. If you don't know yet, have no fear. You can go back and watch last week's show and catch up on that. Today is a vanilla show. right? And so if you listened a couple of episodes ago, you listened and you heard me say that a regular loan is kind of like a vanilla ice cream cone. It doesn't have any sprinkles, doesn't have any mix-ins. It's not the new ice cream shops where you mix in and scoop and all that and flip it to the side and lay it in it. It's not that. So today we're going to talk to you about what you need to do to prepare for that type of loan, because we understand that there are many people who want to buy a house, who want to refinance a house, who want to buy investment property, and you think you're ready. You're sitting there, you're like, okay, this is going to be my year. I put it on my vision board that I'm going to buy an investment property. I put it on my vision board that I'm going to sell this house and buy a new house. And since that date on your vision board is approaching, you feel that you are ready to buy a house. However, before you get to the loan originator or the mortgage broker, it is very important that you understand the why behind the what and make sure that you're not only just saying you're ready, but you're actually ready. This is going to save you heartache and pain. This is going to save you time. This is going to save you unnecessary fees. This is going to make sure that you get the best option out there for you if you are ready before you actually go to the loan officer's office.
Yes.
So let us get started. We're going to talk about a number of different topics today, a number of different points today, all in alignment with you being prepared for submitting a loan.
Oh, yeah.
And let me just say this too as well. Before we get into today's topic, I want to say that when you are dealing with a mortgage loan originator such as Tavares or myself, meaning we are not sitting behind the counter at a bank. Some of you get your mortgages from your bank. You walk right into your local bank, whether it's Wells Fargo, Bank of America, whatever the case may be, and you get the mortgage from there. It's different when you're working with someone like Tavares and I. What does that mean? We have so many different options. We have so many different lenders. There is no one size fits all. So in the very beginning, when you come to us and say, hey, I want to purchase or I want to refinance, we're going to ask you some questions. We're going to ask you a lot of questions. Yeah. We're going to ask you for some documentation as well. And I want you to feel that we are on your team. So when we're asking you these questions, I don't want you to be embarrassed. I don't want you to withhold some of the story. I don't want you to tell us the answer that you think we want to hear. We want you to have a conversation with us that is open, that is transparent. And it's like, hey, you are giving everything to us so that we can take the time to dissect what you have. We call that analyze, review everything, and then present it to someone behind the glass at the bank. Big difference. And this is very important because I think people subconsciously don't realize that they're like, oh, well, no, and this and that, and they're holding back and things like that. It's like, don't hold back. Like, we on the same team.
Right.
You want to close this loan, and I definitely want to close this loan. We are on the same team. So this is something very important for you to note. Breathe that sigh of relief that when you are seeking a mortgage, you should be working with someone who you view as your teammate. You should be working with someone who you can be fully transparent with. You should be working with someone who you know has your best interest in mind and heart. Therefore, you should feel open enough to be fully open, transparent, and honest, because you know that the person that you're working with, Tavares or myself, we are going to go to bat for you. We're going to find the best loan possible for your current situation. Okay. All right, let's jump into it, T.
Yeah. So nobody wants to, or is it best to, let's say someone wakes up in the morning, right? It's Saturday morning, and they say, you know what? I feel like having a party today, right? I feel like having a party. No plans, no decorations. The house isn't clean. You don't even have any food in your refrigerator, no bottles of water, no coolers. You don't have a speaker for your Bluetooth or anything to entertain your guests, right? Your son killed the spider in the bathroom 3 days ago and it's still on the floor, and you got a little ring around your toilet and everything. You're not in position to have a party yet, but you're still adamant about having this party. And oftentimes people want to buy a house that same way. Like they'll just wake up one morning and say, you know what, I want to buy a house, right? Without doing those necessary preparations prior to making that decision. So today is going to be that preparation to help you guys get prepared for it, right? So step one is a valid ID. Well, two forms of valid ID. So that can be a driver's license, social security card, passport, etc. It got to be a government issued ID. So you can't submit a college ID or your ID from your job and stuff like that. And to my guys, a lot of times our grandmothers or our mother may have our social security card, right? You want to have that, right? You don't want to say, oh, I got to go to my grandma's house and get my social security card. You are an adult that's thinking about purchasing a home, right? So that right there requires a huge amount of responsibility. You follow me? So if you're not ready to purchase, if you're not ready to take control of your social security card, then you may not be ready for a home purchase, right? Go ahead and go to grandma's house, pick up that social security card and put it where all Black mothers do. Put it under your mattress, right? In between that box spring in your mattress, right? Or a shoebox or something like that. And valid ID is really important. So valid means it can't be expired, right? It can't be. So sometimes we forget to, go by the DMV to update our driver's license on our birthdays and things of that nature. You gotta be valid, gotta be upfront, gotta be current. So those are two or three different forms of ID that you can use. Have to be government issued, and they're going to need two.
And let me just say, this may sound very simple for some of you who are listening and you have all your T's crossed and all your I's dotted. This may sound very simple, but you would be surprised.
Oh, yeah.
You would be surprised at how many grown folks are walking around without two forms of valid identification.
Yes.
From suspended driver's license to expired driver's license. And if we go back to suspended driver's license, I'm talking suspended driver's license for months and months and years.
Yeah, it happens.
You would be surprised. So we're saying you need to have a valid ID, two forms, one of them a driver's license or a government issued ID card, and your social security card, your passport. You would also be surprised how many people don't have their passport, how many people don't have a second form of ID. Doesn't make it right or wrong. That's why we're preparing you now. So you can listen to this and say, you know what? I have that new home or investment property or real estate mogul on my vision board. I'm writing it down. I'm saying that I want to manifest it. And what I am focused on is the property. And I'm not even thinking about the baby step. So doing this action of making sure, let me look at my ID. Let me go ahead and get my second form of ID will help you get to the point that will help you get closer to your goal of buying that property. So this is included in the step. Before you even look at a house on Zillow, before you even call us and say, what's the interest rates today? Before you even do that, let's start here. And about the social security card, Tavares, you're very right. Because anybody in my family, they know I got a whole, listen, even passports, bring it back. You need to bring it back when you finish. And they know, right? So I got your birth certificates, your social security cards, everything like that. So either check in with your mother, your grandmother, whoever, make sure that they have it and they know where to touch it, or go order a new one. Very easy. Order a new one before you even need it. So I love that you started off today with two seemingly simple, but very impactful and very powerful pieces to the clean file, which is two forms of valid ID. What you got next?
Imagine if you were putting a contract on a house, and we know homes are selling very rapidly, right? So you found the house, you watched our video on credit, you got your credit together, you got your savings together, right? You got with Antonio, you found the house, and you're ready to submit that contract, and you have everything in order, but you just have one form of ID. You just have your driver's license. You don't have your social security. You don't have a passport, right? So now you got to go to the social security office, and you got to put in the order or set an appointment to go in to get a copy of your social security card. So now you can't even submit your offer of something so small, right? So you guys don't overlook it because it's so common, right? Everybody has ID in their wallet. They walk around with it every day, but sometimes it's not so common. Sometimes not so common.
And especially for my younger folks, right? Because a few episodes ago, we talked about the fact that it is okay for you to buy a house with your mom. It is okay for you to buy a house with your mom and your grandmother. It's okay for you to buy a house with your mama, your daddy, and your grandma. And if everybody's living in one house, it's okay for you guys to say, you know what? We're tired of paying rent. Rental prices keep increasing. We all work, or we all have sources of income. Let us get together to qualify for this loan. Excuse me. Oftentimes the young folks won't have the secondary form of ID. So if you listen to that show and you're thinking about that, let this be a reminder, excuse me, make a little note to say, hey, after this show, let me go secure a second form of ID. Let me just start the process of obtaining a second form of ID.
Yep. So that next piece of vital information is going to be your pay stubs, right? So anytime you are applying for a loan, that lender want to make sure that you are able to pay back. And one way they do so is checking your pay stubs. Now you're going to need 2 of your most recent pay stubs. Some people get paid monthly, so that's going to be 2 months, of course. If you get paid every 2 weeks, or you get paid bi-monthly, you get paid weekly, you're going to need 2 pay stubs. And most importantly, some people get aggravated with the process, but while your loan is in underwriting, or while it's in process, all the way up until from start to finish, until closing, you're going to have to continuously submit your pay stubs. Every time you get a new pay stub, you're going to have to submit that, to send that in to us, so we'll have that in the file. Why? The underwriter's going to ask for it. They want to make sure that there's no interruptions with your job. They want to make sure that your income is still steady, based off of what you put on the application. They want to make sure that, case in point, one of my tenants, right, she worked a lot of overtime during the summer, right? She's in Section 8. Section 8 went in and they made some adjustments to her voucher, because her pay or her income was a lot higher during the summer months because she worked a whole lot of overtime, right? And she usually pays, a few $100s per month, and Section 8 pays a larger portion. However, they flipped it around. Section 8 only paid a few $100 this month, and she was responsible for the larger portion. So reason being is because her income went up for those few months. Now, that wasn't her steady income amount. It's just that during that time period, she was able to work some extra hours for a month or so. So it looked as though she's making a whole lot more money. So Section 8 made some adjustments. So underwriters, they want to make sure that your income is not drastically fluctuating, and that you'll still be able to maintain and pay back this loan when you receive it. And one way they do that is your pay stubs.
Yes. And speaking of pay stubs, oftentimes when we believe that the way we do something is the way that everybody else does it. What do I mean by that? Just think about anything that you do. When you find out that someone else does it differently, let me give you a very plain example. If you're out there listening, I want you to ask the people closest to you, whether you're at work, your co-workers, gather them all in a room, or don't gather them at the same time. Just go one by one and ask them, how do they make a peanut butter and jelly sandwich? Ask them the process. And I guarantee you that if you go to 3 people, you're going to get 3 different processes. If you want to simplify it, another example is ask them, how do you take a shower? If you go to 3 different people, you're going to get 3 different answers, 3 different responses. Some people are going to tell you that they turn the water on and then they wait for the water to heat up. And while they're waiting for the water to heat up, they're taking off their makeup, they're tying their hair up, whatever the case may be. Some people are going to tell you they turn the water on while they're in the shower and they let the cold water energize them. Some people are going to tell you they squeeze the soap on a loofah sponge. Some people use a washcloth. Some people put the soap directly on their body. The point is, we all do it differently. And oftentimes you're in your own silo and you think that people do things the way that everyone does things the way that you do it. How does this relate to your pay stubs? Did you know that there are so many different ways that people get paid? Some people get paid monthly. Some people get paid weekly. Some people get paid bi-weekly. Some people get paid twice a month. And bi-weekly and twice a month sound similar, but they are not the same. So when it comes to calculating income, you need to be aware of how you get paid and have that conversation with your mortgage loan originator so that we can calculate your income correctly, because you may be thinking, oh, this is my pay. I make XYZ dollars a month. And by the time we use the standard calculations, that number could be less than what you're thinking. So it's very, very important for you to understand how you're paid, and then also understand that everybody is paid oftentimes differently.
That's true.
That's a good point. Another point to think about when it comes to your pay stubs is I want everyone out there to understand the difference between gross pay and net pay. And you would be surprised. Some of you are out there listening, you saying, I know, that's easy. There are hundreds of thousands of millions of people that do not understand the difference between gross pay and net pay. Does it make it right or wrong? This is not something to be embarrassed about. This is why we're educating you. So gross pay is the amount that you're paid before all your taxes and deductions are taken out.
Yes.
Very important. Gross pay is that amount where when they hired you, they may have said, we're going to pay you $75,000 a year. We're going to pay you $150,000 a year. Your net pay is what you actually take home. It's what's direct deposited into your bank account. This is very important. I encourage everyone that is watching this show to go and look at your pay stubs. When you look at your pay stubs, I want you to be able to identify the difference between your gross pay and your net pay. I also want you to identify your pay frequency. Are you getting paid twice a month? Are you getting paid bi-weekly? Are you getting paid monthly? Are you getting paid weekly? These are some of the things that you can start to do as you have that new home, investment property, real estate mogul on your vision board. You can't jump from A to Z. You can't jump from A to Y. A part of the steps to get you from A to B to C to D is to do this work. And for those of you who are listening and you are self-employed, loans for the self-employed people have gotten very, very creative. Back in the days, the only way to qualify a self-employed individual was through tax returns. Now we will take bank statements. So what does this mean? Tavares and I talked about the importance of monitoring your bank activity a few shows ago. So if you are self-employed, and note, for the purposes of qualifying for a loan, self-employed means you own 25% or more of a business. So all you have to own is 25%. If you own 25% of a business and you have a different job where you're a W-2 employee and you need some more income, we can use your business bank statements to help qualify you for the loan. What does this mean? As we talked about, once we get into opening up bank statements and showing your bank statements, you basically get naked. You done took the girdle off, you done took everything off. You are getting naked. So when you think about that, if you know that your goal is to buy a house, refinance a property, buy an investment property, and you know that you're self-employed, you definitely want to start being mindful of your bank transactions and cleaning them up so that we can submit a clean file. There are some banks who will take 50% of the deposits in your business bank statements. There are some lenders who will take 85% of the deposits in your personal bank statements. And you may be saying, Hyacinth, if I'm self-employed, why do I have personal bank statements? Well, you can be self-employed and a sole proprietor. That's a fancy word for saying it's only you. You may be the lash lady. You work for yourself. You don't have other employees. So all the money is Zelle to you, right to your personal account. It's Cash App, right to your personal account. So for my gig economy people who are doing gigs and making a living, you may be the cake lady. You may be the tipsy strawberry lady. Whoever you are, you may be a barber and people are zelling you and Cash Apping you. We can qualify that as income. We're going to take your personal bank statements. Now, on your personal bank statements, while we see the Zelle and the Cash App and the routine deposits, you're a barber. So every Monday, because barbers are closed on Monday, you're making deposits of $2,500 a week. There's a pattern. We can take that. However, when you open up your bank statements, we're also going to see all your other subscriptions. We're also going to see everybody else who you're sending money to. We're also going to see if you're at RoofQuest every day. We're going to see all of these things. So there is a way for you to qualify and get a loan, but you just have to do the work now. So although you may not be ready to close tomorrow, doing the steps that we're talking to you about today will help you so that when you get to the date, you're like, oh, I'm already ready. Because I listened to this show way back in September 18, 2023. Here it is, September 18, 2024. Maybe it's February 2024. Maybe I'm ready right now to do it. But this show is designed to help you prepare yourself.
Yeah,
all right.
That was some good info. I actually had bank statements as one of the points, but Heisey touched on it. So to add one thing, right? So when you submit these documents, so when you submit your bank statements, we have to get the full package, right? Sometimes bank statements will have blank forms in them, and they'll be blank intentionally. But at the bottom of that page, it'll say 5 of 5, right? Or 4 of 4. And the underwriter has to see the full statement. Bank statements, tax return, any documentation that you send in, you don't want to exclude forms just because they don't have any documents or they're blank, right? Or they don't have any documentation on it. They're blank. That's just to add the bank statement. So we can just skip past that one. That was like a 2 for 1.
That was 2 for.
That was pay stubs and bank statements. So the next one is going to be, Go ahead. You was going to say something?
Oh, I was going to say that's a great point that you mentioned about looking at the page numbers.
Yes.
Don't just give us what you think, we want to see.
Yeah.
If it says 1 of 10 and 7, 8, 9, and 10 are blank and they just have disclosures, you got to provide all 10 pages.
Oh, yeah.
So that's going to tell you what you need to provide.
Mm-hmm. Next, we got W-2s and 1099s, right? Heisey touched on those as well. Those are your tax forms. So basically anything that you will take to your tax preparer to file your taxes for the year, that's what you want to bring in to. You want to submit those documents. It just shows that, one, you do indeed have a job. Believe it or not, people make their own W-2s, people make their own pay stubs and things of that nature. So the underwriter or the lender is going to ask you for multiple documents to verify your employment and to verify your income. And guess what? They all have to match up. So if you're sending pay stubs that you make, I say $6,000 a pay period, but your W-2 is saying that you only make $40,000 for the year, that's a red flag to the underwriter. So they're going to, every document that you submit, they're going to connect those. It's going to tell a story. And the story has to say, it has to be accurate. It has to make sense. It has to equal up to that particular dollar amount. And you have calculators on the other end of the lender, right? So they're like humans. That's what underwriters do. So they'll plug in numbers and they have, fancy computer systems just to make sure that they're not getting played, basically, So W-2, 1099, and any other tax forms that you will submit are very important.
Yes. And while we're on the subject of income, whether that's pay stubs, bank statements, or tax forms, I want you to think about your sources of income and break it down into 3 columns. Your primary source of income, your secondary source of income, and additional sources of income. Mm-hmm. We take them all. Mm-hmm. So a lot of times, I don't want to say most people, but oftentimes people have more than one source of income. Mm-hmm. They may have a W-2 job. They may do some gigging. They may have an investment property. We want to look at all sources of income, and then we want to validate the income before we calculate the income. Mm-hmm. What does that mean? We're going to ask you probing questions. We're going to ask you questions so that we can gain a better understanding of this income. Don't get offended. Don't get defensive. We're on the same team. So we may be asking you details about your tenant. We may be asking you details about you being the cake lady or the t-shirt man. We may be asking you details about that, but we're asking you details because we need to be able to paint a picture to the underwriter. Mm-hmm. So when we're asking you details, it's the equivalent of us deciding, do we need a color pencil? Do we need watercolors? Do we need Sharpies? Do we need crayon? What do we need? And we can only determine what we need based on what you tell us. So a lot of you, again, I want you to think about your income: primary, secondary, and additional. Also, a great point that we're going to have to prove to the underwriter is the likelihood for your income to continue. Mm-hmm. Very important. The number one area I see this is with people getting child support or alimony. Mm-hmm. If the kid is 17 and you want to use child support to qualify for the loan, we have to ask, is the child going to college? What does the agreement say? Because if the agreement says that the other parent stops paying child support at 18, we cannot use that income to qualify you for the loan. Mm-hmm. We need to review the likelihood of the income to continue. So there are sources of income that are very likely to continue. And then there are sources of income that generally have a defined end date. Really quickly, I want to go over a few of those. So sources of income that you may be receiving that you want to start thinking about and saying, gosh, do I need to use this income to qualify for a house? Maybe I need to move that date up on my vision board. Maybe I need to move that date up because this income may not continue for another 3 years. Alimony is one. Child support is another one. Distributions from your retirement account.
That's big.
That's a big one. Big one. That income oftentimes does not continue forever unless your retirement distribution is structured properly. Plug the Henderson Financial Group. But if it's not, we need to review that to see if the likelihood of it continuing. Public assistance. Tavares just gave an example of one of his Section 8 tenants where her housing payment was significantly less, but she went and worked a lot of overtime and it flipped. Right? So public assistance, as we know, the amount received can change. Mm-hmm. Social Security income, trust income, and VA benefits. These are all sources of income that we are going to need to source their likelihood to continue. Mm-hmm. So you want to keep that in mind if you're going to use these additional sources of income to do whatever it is that you want to do to qualify for a purchase or a refinance of a property.
Those are great points, because the today's price isn't yesterday's price, right? Today's income isn't tomorrow's income, right? Another way to look at it. So that was an excellent point. And a lot of times people forget that certain incomes have expiration dates, right? And it doesn't have to be a bad thing. You can just make an adjustment, right? Replace that income with something else, and then now you'll be able to document that. Next point is tax returns, of course, right? Tax returns. Heisey just spoke about different sources of income that you may have. For that income to be usable for your file, it will have to be documented on your tax return, right? So if you're making money on the side, you have a side business along with your, W-2 income from your job, that income that you're making on the side from your side business or your side hustle, you'll have to document that on your tax return. I think Schedule C or something like that. You have to,
if you're getting a vanilla loan.
Right. If you have a tenant and your tenant is paying cash, right? There's no Section 8 at all, and they're paying you cash, right? You want to document that to be able to use that income. It has to be on your tax return. And also when you submit those tax returns, you got to provide the whole packet, right? All pages of it. Don't skip anything out. And like I said, just put all your income on there. I know we try to, get creative with tax returns to avoid liabilities and avoid having to come out of pocket, things of that nature. But keeping in mind that you want to purchase a home, right? That's something that it's a bigger goal. So it's having your eyes on the prize. It will force you to do certain things, right? And doing those certain things or make certain sacrifices, should I say. And when those sacrifices are made, though it may sting a little bit up front, but it's going to feel good on the back end, right? And that back end it lasts a whole lot longer than that slight sting up front. So yeah, you may have to pay, $3,000, $5,000, $10,000 on an annual basis when you're trying to, because you're preparing to qualify for a loan. Yeah, that may sting a bit on the upfront, but it will not feel, that feeling will be worth it when you closing your home, right? And you closing your home on December 2023, and by December 2025, that home has appreciated in value, right? A lot more than what you had to kick out when it comes to your tax returns to qualify. So,
great point. And that's for those of you who want the 2 scoops of vanilla on a cone, like maybe even a cup. You don't want no sprinkles, you don't want no syrup, no caramel, no snickerdoodle inside. You don't want none of that. You don't want no brownie on the bottom warmed in the microwave for 45 seconds. You don't want none of that. You don't want that, right? You just want a vanilla loan. When you get a vanilla loan, oftentimes you get the best rate and terms that are available. And I'm air quoting best, but if you get a vanilla loan, you're going to get more favorable rate and terms. You're going to have to show them everything.
Yes.
You want the best of the best? Let me see you didn't claim this income on your tax return. How can I count this income? However, if you're like, you know what, I like a little funky Watusi with mine. I'm okay for you to give me a little higher rate because I didn't file this on my tax return, but you can look at my bank statements and see this money coming in. There's a loan for you as well. So that's not the vanilla loan. That is the loan with the sprinkles and the mix-ins and all that stuff. So it really depends on where you fall and understanding what's available to you. So just think about that, because oftentimes people will come in and I want this and I want that, but you don't qualify for that. You need to sit this one out first. You need to do what Tavares said. You need to actually show all of your income, file the tax return, and do it the proper way. Wait some time and then qualify for the loan. But if you don't want to do that, let us see your bank statements. They will give you a loan based off of your bank statement. Deposits. They're going to look at deposits.
Yeah.
And we talked about this a little bit on the last show, because oftentimes self-employed people, real estate investors, they make the deposits into their bank accounts. But when it comes time to have their taxes to be prepared, they have a certified tax coach. Shout out to Larissa Humphrey. Shout out to Mr. Henderson, who knows how to structure their tax returns and create a tax plan so that although they received all these deposits, they aren't paying income taxes on it. Completely legal. And now you want to get a loan where your tax returns say you don't qualify, but your bank statements say that you do. This not 2 scoops of vanilla on a cone, though. We're going to have to do a little bit more work for this. Your rate will likely be a little higher, but you'll still get the loan.
Yeah.
Okay.
Yeah. There's multiple ways to skin a cat.
Yeah.
Multiple ways. And that's where the questioning comes in up front. So we're not trying to get in your business, but we do have to get in your business. And the reason for us asking those questions, it's like we're personal chefs, right? and you want your meal to come out delicious, right? You want it to be finger licking good. You want to be licking the plate, and that's what we want you to do. But in order for us to create a plate that will, make you lick the plate. Did I say that right? In order for us to cook the food, cook the meal that's gonna make you lick the plate, we have to ask you, okay, what do you like? What do you dislike? What's your favorite, right? What's your favorite seasonings and spices and things of that nature? Do you prefer fish or chicken or beef? What's your pick, right? And the more information that we have, the more information that you give us, the more delicious or the more we can customize that particular meal for you. Next point is your verification of income. Verification of employment. Verification of employment. That's another big one. So that's not a document that you would submit. However, that's a form that you would sign off on, right? And once you sign off on that form, that gives us permission to contact your employer. So the HR department or your boss, they'll sign off on it. They'll include your income amount, how long you've been working with that particular company. Also, what are the chances of you continuing with that company as well? Because they want to make sure that the money is going to continue to come in. And that verification of employment is a big one because you typically want 2 years of work history, right? Because you need 2 years of tax returns. So your 2 years of work history, your 2 years of work history. A lot of times people say, yeah, I worked for within the past 2 years, but they probably worked at one company for 4 months, right? And probably had some time off for 2 months, then worked for another company for 1 month and had 3 months off, and then found another job for 6 months, right? So they had some spots or some empty spots within their employment history. In those empty spots, the underwriter is going to ask you guys for a letter of explanation, right? They want to know what took place in those time periods. Like, why were you out of work? Why didn't you have any income coming in? We're going to give you this loan for $400,000, $500,000, $800,000. So the cleaner your history is when it comes to your employment, the smoother your chances are. So you may, be hating your job right now, or you may have bounced around a bit. If you find a place that you like, lock in there for a little bit. It's going to it's going to help your file the longer you are with that employer, and that you can show that proof that you've been there for a while.
And be nice to your bosses.
Be nice to your bosses.
Be nice to your bosses, the HR lady. First of all, you should be nice to people anyway. You should be kind. You should be like, hey, how you doing? Like, it literally does not cost anything to say hello. Like, it will change. But the reason that I say this is you need these people to do a verification of employment for you.
Yeah.
So if you got an attitude, you popping your neck, you telling people off in the emails and all that kind of stuff. I mean, there are sections. So they have to verify the amount of income, which is standard. They can't include their feelings in that. Whatever your income is, how long you've been working there, that's standard. However, there are other sections on the verification of income form that are not required, but are looked at as more favorable, such as likelihood to continue working there, such as I don't actually, I have it in front of me. I was going to say the type of employment, probability of continued employment, 15 and 16. They ask you to give some other stuff, basically, that you want the people to write down and say some good stuff about you. Right. But if you are angry, unkind, wanting to prove your point and reply all and tell somebody off, be very careful with that. Another thing that we've seen is people holding up verifications of incomes. Just holding them up. You ready to close? Your earnest money deposit is on the line, and we can't get that VOE back. The person is on vacation, or they went on vacation after they submitted the VOE. Can't nobody else do the VOE? You can't email them and say, hey, I really need you to do this because no, I'm on my vacation for 2 weeks and you got to wait. So think about all of these things, not just for when you're buying a house, but just for life in general. Like, be kind. It's okay. Yeah. It really is okay.
Yeah, that was a great point. Relationships are everything. You always want to have a relationship with somebody in HR, right? Not like Heisey just said, not just when you're buying a house, but that's where the money at. That's what the vacation time is. That's what possible. What do they call those?
Pay increases
and promotions.
Right. And that's what I was going to say. It asked about that. The projected date of next pay increase. You may not even know that they're considering you for a pay increase, but they put it on this BOE. But if they're like, never. Yeah. Projected date, never, Ari. Yeah. You know what I mean? So think about these things. Think about it.
We already went through bank statements. I think we did a great job on that. We also had a whole show on bank statements as well. That was actually very good, very detailed, giving you guys some information on why it's best to have a separate bank account. Start a whole separate bank account that's devoted for your property purchase, right? You may have a messy bank account where your income comes in and everything gets paid out. You send Zelles to your children, you send money to your barber, the lady that do your nails, etc. It's just a lot of movement in that account. In every transaction, the underwriter has to look and also make sense of it, right? And if you have some large deposits coming in, they're going to question that. So just open a whole separate bank account and just move funds in there on a monthly basis, and those funds will be, will help go towards the down payment. So that's the money that you're saving to that account. That account will grow. You'll use that money to pay the down payment, right? Your investment account statements, basically the same thing as a bank account, but it's an important piece, right? It shows that you have assets. And with these investment account statements, of course, they need the full pages. So if it's 5 pages, 10 pages, 11 pages, 12 pages, you got to send the full amount. But it just shows that you are equipped. It shows that you're advanced. It shows that you are reliable, because you have, not only do you have bank account, but you also have an investment account. You may have some Apple, some Microsoft, some Disney, some McDonald's, whatever stock you're into. And it shows that you also have access to this cash. Now, that's another thing, right? Vested. When you submit, sometimes people submit their 401k or 403b investment statements, right? And your 403b statement may say you have $100,000 in this account. However, your vested balance, or the amount that you have access to, the amount that you can take possession of and do what you want to do with, may be only $40,000, right? And that may impact, or that may hinder your closing, or that may force you to bring more cash to closing, right? So the amount that you have vested. So having a statement and knowing how much you have in an account is one thing, but you also want to know what's your vested percentage in that account. That's another important piece to the puzzle.
Good job. I like that you brought vested to the conversation, because oftentimes people don't know what that means.
Yeah.
They're like, oh, I don't know what that means. That's the amount that you can take right now.
Yeah.
Basically, this is the amount that you can put on like a vest and say, I'm out.
Mm-hmm.
If your vested balance is less than your total balance, then you can only take less than what your total balance is.
Mm-hmm.
What can you put on and take with you like a vest and leave with?
Mm-hmm.
So when you think about vested, think, what can I take with me if I left right now today?
Yeah.
And generally it's tied to the length of employment, and there's some key dates and stuff like that.
Yeah.
That'll tell you when you can put all of it on. You can put the whole vest, the full armor of God on,
Yeah.
and leave, right? Yeah. There was something I wanted to talk about really quickly, going back to your tenant who works a lot of overtime. It made me think about seasonal employees.
Mm-hmm.
It made me think about, I don't know why I thought about Joe's Stone Crab.
Mm-hmm.
They're seasonal. They're not open all year. They're
Mm-hmm.
only open during stone crab season. And during stone crab season, their employees usually make great money because it's very crowded, very packed. If you're in a situation where you have seasonal income or your income varies, I don't want you to be discouraged. Know that we're just going to have a conversation so that we can paint a picture.
Yes.
And then also we want to be able to show that this type of seasonal income or influxes of overtime has been consistent for the past 2 years. We want to show some stability, right? If this is something where for the past 2 years, you've only been making X, and then now this summer you made an additional $20,000, but we can't show that you've done that for the past 2 years, we may or may not be able to account for that extra income and say, this is your new salary. Yeah. So always think about these things. And if worst case, if you have any questions, give us a call. That's our job. That's our job. Our job is to validate before we calculate. Our job is to analyze the information that you present to us so that we can get you the best loan available for you, your situation, and your circumstances.
For sure. Next one's going to be your credit report. I mean, you guys, we spoke on this a million quadrillion times, and your credit is so vital. Even when it comes to reverse mortgages, right? And that's a mortgage type where the borrower doesn't have to make a monthly mortgage payment. You're not obligated to, and they still want to know your credit score, right? That right there tells you, okay, we're going to give you some money, and you're not obligated to pay it back, but you still have to be credit worthy, right? I mean, I don't want to go down a redundant hole, but you gotta have at least. You want to have it, I would say at least a 650, right? It's 650, you can get in somewhere. There's some loans that will take smaller or lower credit scores than that, but shoot for a 650. If you are in preparation mode or you're in building mode, you don't want to aim for the smallest number, of course, right? Do what you got to do to try to, push and get those extra points so you can increase your score, and that way you'll have access to lower rates. Yeah, man, it's just something that you need, right? You just got to have it. You just got to have
While
it.
you're on credit, let's quickly talk about the 4 C's. I love the 4 C's. I like things I like iteration. I like things that go together. I like groupings. So the 4 C's are credit, capacity, capital, and collateral.
Mm-hmm.
Credit, capacity, capital, and collateral. So for those of you who are out there listening, you're looking to buy a home, qualify for a home, refinance your home, you want to borrow other people's money, OPM, to do what you need to do as it relates to housing. Always keep the 4 C's in mind. Number one, as Tavares just talked about, how does your credit look? Yeah. How does your credit? Your credit tells a story. What story is your credit report telling about you?
Yes.
I'm not saying you have to have the top of the top 800 scores, because sometimes people have 800 scores, but their credit report is not telling a story that is more favorable than someone who may have a 700 score. Your credit report tells a story. So that's the first C. The second C is the capacity. Capacity is a fancy way for saying how much house can you afford?
Yes. Yes.
And that's a big one, because a lot of times people want big houses. They want the bells and the whistles but they don't have the capacity to hold it.
Yes.
They don't have the capacity to pay for the mortgage and the taxes and the insurance. They don't have the capacity. So as we are reviewing your documents and as you are preparing to purchase a house or to obtain a loan, and I keep saying obtain a loan because you may be refinancing, you may be seeking a HELOC. What is your capacity to be able to take a new loan? So you have to think about that. One of the big things that affects your capacity is where you stretched out in other areas.
Yes.
This is huge.
Yes. I'm still stuck on the credit thing, right? Because I just thought my mind just went back to right before we came up for the show. We had a client came to the office to take care of some things. She got a reverse mortgage in the past, right? We did it here at the office years ago. Her house is appreciated drastically in value. So she wants to refinance a reverse mortgage to access some of that equity to take care of some things. She want to get a new car, etc. Do things around the house. But she's not able to do so because her credit score is low, right? And in this case, her credit score isn't low because of something she did. She was actually trying to help her kids and her grandkids, putting cars in her name and apartments in her name and things of that nature. And their grandkids, they ran off, right? Cars got repossessed, moving out of apartments, etc. And it just brought her credit score down. So she's trying to be a sweetheart and help people out. Said that to say, you guys want to protect your credit score. When you have a dope credit score, you want to protect that and protect that with your life. I know oftentimes we want to help our children out, but they have to put forth effort. They got to take 5 steps, and you can take 1 for them. After they take the 5, you can take the 6 for them, help them out. But you got to protect that, right? Because here she is in a situation where she's trying to help all these other people, and she can't help herself because she's trying to help all these other people, and she has the equity to do it. The mortgage type doesn't have to be paid back. It's a golden situation had that credit piece been there, right? Had it been there. And
emotional blackmail. I tell people all the time.
Yeah.
And I'm very blunt with it. People are like, I'm like, why? Nope,
Yeah.
Let them figure it out.
Yeah.
Let them figure it out. Because if a person is in that situation, and I know everybody needs help, I understand. But like Tavares said, let them take 5 steps and then you take 1.
Mm-hmm.
But here it is, someone who you love, you birth, and then the people who you birth these people as well.
Yeah.
Got cars and apartments in your name and said, to heck with you.
Mm-hmm.
To heck with you.
Mm-hmm.
And that happens when people usually don't have any skin in the game.
Mm-hmm.
They're like, oh, it's on this person. So, oh, yeah, it's okay. They'll let it slide. They got it.
Or grandma, you about to, anyway, I got more life ahead of you than anyway. So you go ahead and take this bullet for us, grandma. And,
Yeah. And it happens with younger people too. And I tell you, I'm like, nope, let them figure it out. Let them figure it out. People will figure it out if they know that you aren't there.
Yeah.
You get to choose who you want to be there for. And it's not everybody. Because then, like Tavares said, you're in a situation where you can't make a move because you've helped somebody who ended up hurting you.
Yes.
And really what you did is you hurt them as you hurt yourself because they didn't learn.
Yeah.
They weren't even properly positioned to be able to take that blessing in the first place.
Mm-hmm. Mm-hmm.
But that's a story for a different day.
Yeah. Well, so what's the third
capital.
C? There you go.
Capital. You got to have you some money.
Yeah, man.
You got to have you some money.
Yeah.
You can't spend it all.
Yeah.
You actually got to save some. You actually have to say, you know what? I'm going to actually use this money and set it aside so that I can use this money to make some more money for me. I know the stores are calling me. I know they're emailing me. I know the holidays are coming up, but I need me some capital.
Yes. And the crazy part, the crazy part is, right? Society wants your money. Society wants your money. And they do so in creative ways. So when you go into the grocery store, I tell people all the time, learning how to grocery shop is a skill, right? You think the grocery store put the peanut butter next to the jelly for your convenience? You're sadly mistaken. They do that for their bottom line. Do that for their bottom line. You all right over there?
I asked somebody to give me some doggone cough drops. I ain't get a text back or nothing. But go ahead.
Yeah. So the grocery store, they put the peanut butter next to the jelly for their bottom line. They want you to spend as much money as possible, even when you don't need it. You can have 3 cans of jelly at home, right? But you know you need peanut butter, so you walk over to the peanut butter aisle and you grab the peanut butter and you see the jelly right next to it, and you're like, you know what? I might as well grab some jelly. You get home and you got a refrigerator full of jelly, right?
You see it on sale.
Yes.
It's a sale.
Yes.
I need this.
Yes. The world
Good
is
point.
valuing for your money. They're valuing for your money. So you have to be strong. You have to be strong-willed and strong-minded at the same time to say, you know what? I know all y'all want my money, but I want my money more than y'all want mine, right? And I'm gonna show and prove that, right? You have to keep that goal in the front of your mind, not the back of your mind. I want to purchase a home. I want to refinance my home. I want to purchase rental property. Keep that in the front of your mind so you're able to capitalize. And you need money to do it. You need money to do it.
You might have to close this out with collateral.
Collateral. Okay. So collateral. That's an easy one. Collateral is the property got to be in lendable and livable condition, right? So you can't have no holes in your roof. Your foundation can't be sinking. No plumbing issues. You can't have, wires hanging out the wall and, light fixtures hanging down. Got to be in livable and lendable condition. If you're going to think about it, the bank is going to give you a loan with this property as collateral, meaning that if you don't pay, they're going to take this house. So the house, before they give you some money on it, they want to make sure that this house, if they get in a situation where they got to foreclose on you, they're able to get their money back by just selling it really quick. They all want a quick sale, short sale, fast sale. They want to remember, Heisey said a few shows ago, I took mental note of it. Lenders are in the lending business. They're not in the real estate business, right? So lenders are in the lending business. So picture you at McDonald's and you work the fries, right? You the man at the fries, right? You can go to the freezer, you pop open these bags of fries, you drop them in the grease, and you the fry man. You pick them up when they're done, the machine going off, you pour them in, you add the little salt. You the fry man. That's what you do. You the fries. Now, your homeboy, he worked the drive-through. He take the orders and he pay the orders. Get the credit card, get the cash, you pay the orders, right? Your boss is telling your homeboy, hey, man, you need to tighten up. You're not doing this right. You're not doing that right. And your friend, he's still making mistakes. He's still doing what he want to do. So your boss say, you know what? Go home. Send your homeboy home right from the drive-through. And he tell you, the fry man, I know you're good at these fries. I know you on these fries, but I need you to take care of this drive-through too, right? So you got to do the fries, right? Cook them up. Make sure you don't burn them. And go over here. You taking orders at the same time. You got to go. You taking payments at the same time. You came off of something that you are designed to do, right? God put you here to make fries. Make these fries. Now your boss say, you know what? I know you on the fries and you good at it, but I need you to take these orders and pay these orders at the same time. So now you running back and forth. You running back and forth from the window to the fries, from the window to the fries. Taking credit card. You taking people's credit card over there to the fry machine. That's chaos. Nobody wants that. You're gonna quit your job. That is equivalent to the lender, right? The lender, he's the fry man. He don't want to come over and take orders. That's not what he want to do. He want to stay the lender. He want to lend you some money and make interest off of that money. That's how you want to make money. But when he got to come out of his position and go over to the window to take credit cards, i.e. sell your property because, you foreclosed, whatever the case may be, that's not what they want to do. You taking them out of their position. It's like moving from quarterback to safety. They don't want that. They want to be a star what they used to being a star at.
And now since you got me out of position, it's my rules.
Yeah.
Since you got me over here, it's my way.
Yeah.
Right?
Yeah.
I like that. Great analogy, T.
Yeah.
I love that.
Yeah. So that is the 4 C's. If you're doing a refinance, something else that we'll need is a current mortgage statement, right? That's easy. They just want to see that you indeed own the house and the house is in, the mortgage is in your name and, stuff like that. They'll show your lates and if you're on point or if you're on date with your mortgage payments and stuff like that. just small, just send it in. It's real easy. I mean, your credit report will show if you're up to date or if you're behind and stuff like that. However, they just need that extra documentation. Why? I don't know, but just send it in to the people. That's another thing. They might ask for all kind of crazy stuff instead of putting up a fight, instead of being just aggravated. Just send the people what they need so we can move the process along, right? It's not me. Trust me. It's not Heisey. Trust us. We trust. If we don't want to call y'all or email y'all for extra documentation. That's not what we want to do. It's really not. We rather be doing something else, right? But the people ask for it. When I say the people, I'm talking about the lender. The lender asks for it. Just send them what they need so we can move on.
Yeah. And so the why behind the what, the reason why they're asking for additional documentation or a lot of documentation or in-depth documentation is because, remember, they're in the lending business. They need to be able to sell your loan.
Yeah.
They need to be able to get some money off your loan. So yes, they see your job, your W-2s, your credit, things like that. If they are asking them to go a little bit deeper, it is because something is not completely clear, and they want to be able to make sure that they can make money off of this loan. They want to set you up for success. Mm-hmm. Because as long as you are successful over there sprinkling that salt on them fries and you got that grease just at the right temperature, them things coming out crisp, ain't nobody sending the fries back. Mm. Ain't nobody saying these fries are burnt. Ain't nobody saying these fries got old oil. Ain't nobody saying ain't no salt on these fries. Everything is running smoothly. The drive-through is not backing up because people aren't looping around, coming back and complaining. Same. So let's talk about this when it relates to lending. If your file is clean and it has everything they need, they're like, good, this person is on track to pay their mortgage payment on them first every month. Yeah. We ain't got to babysit them. We ain't got to talk about foreclosure and short selling and none of that. So that's why they ask for additional documentation when needed, because something may be unclear and they want to make sure that they're getting in a great relationship where you're doing your job and they're doing their job. Yeah. And everybody's going to work out just happy.
Yeah.
So think about that. Just think about that. And again, that's why we do these shows, to prepare you so that you can position yourself to be ready to qualify for a loan. Yeah. That's the best way we can say it. Because sometimes by the time you come to us, you want to do it right now. Mm-hmm. You don't want to hear about 6 months from now. Mm-hmm. You want to do it right now. I want to be ready right now. And then there are some of you who we say, hey, this is what needs to be done. Give yourself 6 months. Here's the play. Run the ball the way we say run the ball. And you actually do it. Yeah. But some of y'all don't have no foresight. And if you can't get it right now, you like, oh, forget it. And then you'll be back in a year and still in the same position because you didn't use the foresight and stick to the play that we gave you.
Yep. And lastly, homeowners insurance, proof of your homeowners insurance. Of course, you won't need this if you're purchasing a home, but if you're refinancing or if you're going into a reverse mortgage, you got to show proof that you have homeowners insurance. Why? Because the lender want to make sure that the house is protected. And we live in South Florida, so we live in a hurricane-prone region of the United States, and it's not so much if a hurricane is coming; it's more so when is it coming, right? And when that hurricane comes, the lender want to make sure that this property is protected against loss, flood, flood insurance. If you're in the flood zone, you got to have that too. They just want to make sure that you are doing the necessary procedures to protect the asset. You got some skin in the game. We got some skin in the game. We just got to have this protection in place.
And even if you're purchasing a new home, at the start of the loan, you're not going to, homeowners insurance isn't going to be required. But before we close, you're going to have homeowners insurance because the day that you close, that property becomes yours. Yeah. And so they don't want you to close and say, you know what, I'm going to go get me some insurance tomorrow or next month. No, they want to make sure, since they're in bed with you and they have the majority of the skin in the game, they want to make sure that their investment is protected. So homeowners insurance is definitely a big one. We talked about the condition of the property for new purchases. The condition of the property for refinances is very important as well.
Oh yeah.
Let me tell you something.
Oh yeah.
If you don't know what comes along with the upkeep of owning a house, I'll never forget when I bought my first property that I was going to live in, that I lived in, because I was buying rental property before I bought my first owner occupied property. I moved in. You want me to tell you how it started raining from upstairs, downstairs? I'm in a 2-story and I'm like, why is this water leaking out the ceiling? I didn't know that with a central AC that was on the 2nd level, I needed to flush the line once a month, put the little bleach in it and do it. I didn't know that.
Yeah.
I had
Yeah.
no clue.
Yeah.
So because I didn't know that, it backed up. So now the AC unit from the second floor has so backed up, it's leaking. Now I got to get the drywall and get this cut out and all this stuff. Owning a home is very expensive.
Yes.
Upkeeping a home is very expensive. So oftentimes we see where people want to refinance or do a home equity line of credit, a HELOC on their home, but their home may not be in lendable or livable condition.
Mm-hmm.
If we are talking to you, there's nothing to be ashamed of. It's a cause for you to say, gosh, I'm not the only one. Let me start doing something about it now.
Mm-hmm.
This is why with all of my budgeting and financial planning clients, I strongly encourage you put a home repair column. You input a number into that home improvements column. Everything is great now. It's not always going to be great.
Right.
What are you setting aside every single month so that when something happens, you have the money set aside for it and you don't have to let a small problem turn into a big problem? So you have to think about that when you want to refinance or pull equity out of your home. It needs to be in lendable and livable condition. You do have to change the AC filters once a month. Like you really do.
Mm-hmm.
It's going to save your electricity bill. You do got to get down there and wash them baseboards.
Mm-hmm.
You got to get up there and dust the vent fans. Like you got to do all that. I know you just want to decorate and come in, but if you don't do those things, then over time the home will start deteriorating and falling apart. You do have to have pest control.
Yeah.
You got to wash the windows. You have to do all these things, right? To make sure your home stays in livable and lendable condition. Very, very important.
Yeah. And last but not least, right? So we went through all the documentation, but while you are in processing, your loan is in process and you're in underwriting, please do not apply for any loans during the process. So no credit cards, no cars. Someone just asked me the other day, can he finance the new iPhone? I was like, do you need that iPhone right now or can you wait till closing? And he was like, no, I can definitely wait. So something as small as financing the phone, he had more than enough assets to pay the phone off in cash, and it probably wouldn't have hindered the process. But still, you don't want to open up a can of worms. Do not apply for any loans. Of course, don't go buy a new car. That'll kill the file. It can possibly kill the file. So just keep your credit card, keep your social security number to yourself, right?
I like that.
Keep that to yourself.
And even with your cards that you already have, your cards, credit cards that you already have, and lines of credit that you already have, don't add nothing else.
Yeah.
Once you do this loan application, just sit down and be quiet.
Yeah.
Don't buy nothing. Don't look at nothing. Don't touch nothing. Yeah. You ain't got no money for that.
Yeah.
Right? Just sit down and be quiet because we don't want your numbers to change. And then we have to give explanations. And then if we're showing bank statements, we don't have to show why you went to this store and that store. You was at Bell Harbor. Just sit down. Just sit down.
Yeah.
As soon as you close, you can go wherever you want to go.
Wherever you want to go.
Buy whatever you want to buy.
Whatever you want to buy.
See whoever you want to see.
Whoever you want to see.
And be whoever you want to be.
But during the process,
sit down and be quiet.
I'm telling you.
Right.
Like when I was younger, going to the grocery store, my mom used to make me walk with my hands in my pocket because I used to want to grab this snack and that snack and put it in the cart. If she turned her head, she's not looking, I'll put something in the cart, right? She won't find out till she gets to the register or when we get home. So walk through the grocery store with your hands in your pocket. Go through life with your hands in your pocket until your loan file closes. When you close, go ahead. You can ease your hands out your pocket and you can buy this. You can consume that. You can go here. You can go do that. But until then, nah, bro.
Hands in the pocket. I like that. Put your hands in your pocket. All right. I think we're good. Anything else?
No, that's it. That's it.
All right. Well, thank y'all so much for tuning in to Mortgage Minded Mondays. I am Hyacinth Henderson, joined by the fabulous, amazing, phenomenal
Tavares Jones.
Tavares Jones. Mr. Henderson and I will be here on Wednesday for transitions. Yes, we will be here. We will be here on Wednesday for transitions at 12-ish. And then on Saturday at 9 a.m. in the a.m., Mr. Henderson and James T will be back for Understanding Money. If you need to run the tape back on this, that is to watch it again. Feel free to do so. If you need to share this video, feel free to do so. If you need to prepare and get a notebook so that you can one day meet your goal of refinancing, of purchasing, or doing whatever you need to, give yourself some grace, come up with a plan and take one step in the second step. Until then, I think we're good.
Yeah. See y'all next week.
All right. Peace.